Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Welcome to the Forex Super Model first modelled daily market briefing. I'm Professor Code and these are my two assistants. Now, basically what's going to happen is we're going to run through recent flows in regards to the markets and then use those to predict what's going to happen today and beyond. So here we go. Friday, the 6th of the 11th, was the last full trading day. We're currently Monday morning, the 9th of November 2020, and the time is just gone 6:30 in the morning, GMT London time. Now, we've just had the Asian session and we're just starting up the European session in terms of trading, with the American session to come around our lunchtime. Now here we go then. So last Friday, which was the last full trading day, we had an opposed negative driver in the dollar. Now if you don't understand what I'm saying about this, there's 3 videos to explain exactly what's going on, and quite frankly, why would you understand it? It's the modelling jargon. Some of it is just going to be basic trading talk and some of it is modelling jargon. Get up to speed if you can on the 3 videos that have been posted to help you understand what I'm saying. Here we go again. Right, so dollar was the opposed negative driver on Friday, and most of those flows were going into the euro, which was the positive secondary driver. So we had the flows being sucked out the dollar and into the euro, and to a lesser extent the yen. Right, Friday then was the last day of the week, and if you look at the last week in total, you see this is the second set of bracketed figures, and we can see that the dollar again was the negative driver, and it was opposed by the yen, and it was basically over the week 571 points or pips came out of the USD and then went into predominantly the euro. So the euro sucked in 343 and the pound sucked in 30. Now, so the euro was the big gainer from the dollar losses effectively. Now, the dollar, as we said, was the negative opposed driver, and then so far today, which is Monday morning, very early flows, we've actually got the interesting situation where the pound is the unopposed positive driver. So we've got everything going into the pound to the detriment of the rest, and it's mainly to the detriment of the yen. So the yen is the negative secondary driver, and you can see the euro and the dollar have hardly moved in net flow terms. Now that's important. So that's where we are. We've got everybody piling into the pound at the moment this morning, and mainly to the detriment of the yen pairs. And the euro and the dollar are in a state of dynamic equilibrium, fairly static. Right, so that sums up where we are. In terms of the modelling and our own trading, we're running 38 trades at the moment, which are positional trades. We don't just do positional trades, but these trades are positional trades, which means that they're more longer term or medium term. We've got 38 trades, of which 19 are long and 19 are short, and they're all in the GBP complex, and the long side of the trades are 1.2 times bigger than the short side, which gives us a net exposure of 20% long to the GBP complex. Now the GBP complex is not just, in this case, I'll just do it and rub it up, it's not just, so it's the pound complex, it's not just the dollar, euro and yen, they're the core ones, but we're also trading the CAD, the AUD, the Australian dollar, the NZD and the CHF, the Swiss franc. So we've got seven currency pairs going into the full complex trade on the pound. So that's worth knowing. And at the moment we're about 1150 points up, and we've been swinging around quite a lot over the last few weeks, normally staying at about plus 1,000. Maximum went up to was 1,850. So, and we're expecting much more out of these trades, much more. Now I'm going to show you some graphics in a minute, some charts, not normal charts but model charts. So I'll just stop it there. So here we are. We're basically going to look at the last 4 months flows, very kindly presented by one of my assistants, as you can see. Now, if you look at these, the dollar is in blue. So this was July, August, September, October, and we're only early into November, so that's where we're at. So if you look at this, you can see that the blue line, the dollar, was coming up from being the opposed negative driver up, and is now, last month it was the positive rock. So we can see that flows were going into the dollar effectively, or becoming less negative. The euro was in a steep decline, which is the red line, and the yen, we can see, had a bounce, and basically has been very strong through the last 3 or 4 months, and it's up here now. It's the opposed positive driver for last month. And finally the pound has been relatively started high, became quite weak, and is now the negative mover for last month. So that's where we are with regards to monthly flows. And if you look at weekly flows, then we've got the same color coding. Now you can see it's been very choppy. Now the dollar, the blue line, for the week, so this last 4 weeks, so effectively 1, 2, 3, 4 takes us to, that was all of October, and then we had the first week of this month, which is November here. So we're looking at the dollar has been going, the blue line has been going like this. So, and then we're basically, the dollar is the opposed negative driver, so it's on the weak side at the moment. The euro here, the red line, has been chopping, and the week beginning the 25th, it was the opposed negative driver, and it's now on the up, and it's now the positive secondary driver. So the yen has been chopping as well, and it's basically rested at the negative rock. The pound again, chop, orange line, going up and down, and we're now at the positive mover stage. So for last week, the pound was the positive mover. So, and these figures right at the end refer to the middle set of bracketed figures, because that was last week. So that's the first thing to understand. Now, so where are we with regards daily flows? Daily flows, same color coding. Remember, last week was the American election, and the American election was on Tuesday, so it's Monday, Tuesday, Wednesday, Thursday, Friday. Now the dollar was basically the unopposed negative driver on the Thursday. They really didn't want to know the dollar on Thursday, and on Friday, which was the last trading day, which relates to here, so this is That's a graphical representation of that top bracketed figures. There we are, the opposed negative driver on the dollar, which is shown here. The euro was chopping in the positive end of the gearbox here, never actually was the driver, but it was moving along nicely. The yen, which is the green line, basically was on the up last week and then starting to stagnate near the top. And finally the pound, very choppy. It's been a pig to trade, but then the Forex Super Model is designed to smooth out a lot of this thing. As I said, we've basically ploughed through all these issues and we're now 1150 points up. So that's where we're at now. I'll stop that there and then we'll move on to the next section. Right, so that's where we're at the moment. Of course, we don't just want to know where we've been, we want to know where we're going. Now, if you look at today's flows, you can see that the pound is the unopposed positive driver. That normally means one of two things. It means that we're either at a top, in this case, because it's a positive unopposed driver, or we're ramping up for a big up move in the pound. Now, whilst this is only early morning daily data, so it carries slightly less weight, it's still interesting. And our view here is that the pound, which is the unopposed positive driver, is due for more upside. Now we're positioned for that, we're 20% long, but what's going to mess this scenario around? Well, let's look at the data prints today. This week we're looking at significant pound meetings from the Old Bailey, Bank of England, the Governor of the Bank of England, Mr. Bailey, who is basically, he's going to be banging on about negative rates, excuse me, and the fact that the pound is has many tail risks, COVID, Brexit. He's going to be sort of in full reverse almost, saying that they're planning for negative rates, but they don't really want negative rates. I mean, who wants negative rates? Negative rates are admission of failure, basically, that you've basically cocked up the management of the economy. Right, so we're going to get a series of meetings and we're going to get claimant and unemployment data coming out. Now, the claimant and unemployment data is going to be skewed because of the furlough scheme. We've just had it extended by our Chancellor, Rishi Sunak, to basically March, which is the spring next year, which is a massive extension. So, arguably, claimant counts and unemployment counts are less of an indicator of what's going on, because companies will be furloughing their workers as they get government assistance. So that's where we're at now. So looking at the overall situation, and given that the American election, whilst it's being called, you know, as far as I'm aware, I don't know what's going on there. In this organisation, we're taking a very cautious view. Trump's keeping very quiet about it. You know, if you look at the media, it's basically done and dusted. Biden's in, Democrats, you know, and we're moving forward. But in the background, you've got this legal action by the Trump team, and this could seriously upset things going forward. So we don't really know what's going to happen in the American election, although arguably it's been called, as I said. Now, the stock market has been on the up, and the yen, which is the normal transmission, say last week, towards the end of last week, you've got the yen is just starting to think. Remember, the yen on a monthly basis is very high, so there is, you could argue, there's a good potential for downside in the yen. However, normally when you get the basic transmission of stocks is that you get yen weakness, and we haven't really seen yen weakness. So that suggests that we don't have normal risk on. A normal risk on would, as I said, give you yen weakness, and it would also give you probably the dollar yen going up as well. And we've had a hammering in the dollar last week. So to sum up, we're going to stay with our positions which are 20% long the pound. If you're looking at trading from this perspective, you need to watch the video which we're going to make this week, which is how to trade the models. It's not just a case of saying, Eureka, the pound's going up, pile in long on the pound on all the pairs, everything's great. You're gonna have horrible volatility issues if you do that. If you trade in a different manner, which we can show you on a small or a large account, depending on what you've got, you can smooth these out and you can run the trades overnight, through the weekends, through a ploughed field and out the other side. Now, to sum up then, I personally think what's going to happen today is we're going to get a continuation of flows going into the GBP. So the GBP pairs are going to be on the up. Long GBP is of interest, but bear in mind you don't just trade them straight like a steam train, because the volatility is horrible. Thank you. I hope this has been useful. Feel free to leave any comments, and any suggestions regarding future videos will be much appreciated. All the best. Good luck with your trading. I'm signing off now.